Assalamualaikum. My name is Alif Muhammad Akil. My matric number is 308749.
My name Ahmad Dalami bin Abbas. My matric number 301422.
Assalamualaikum. My name is Kabir Abdullah Al-Misbah. My matric number is 308614.
Assalamualaikum. My name is Siti Nohumaira binti Saimi. My matric number is 304368.
Assalamualaikum. My name is Ahmad Zaki Ilyasa and my matric number is 308616.
Okay, today we will make a discussion for our project. For part A, we need to prepare statement of profit and loss, statement of change in owner equity, and statement of financial position. So we need to clarify this trial balance. So we start with cash.
For cash,
Yeah.
cash is physical money. Physical money owned by company. So that company can use anytime. And cash is current asset, iaitu aset semasa. Second is account receivable. Account receivable ni adalah akaun belum terima ataupun penghutang. The amount owed to the company by customer for purchase on credit. So kiranya macam pembelian secara kad kredit. Dan account receivable ni adalah current asset. Tiga is merchandise inventory. Merchandise inventory ni adalah item purchased by a business for resale to customer. Kiranya barang yang dibeli oleh company dan dijual balik semula. Dan merchandise inventory ni adalah current asset. Okey, seterusnya office suppliers. Office suppliers ni adalah bekalan pejabat. Used in daily office operation and not permanent, such as pen and A4 paper. We use in operation.
So next, for sales supplies, in this situation, we put in a statement of financial position as a current asset because it is a short term and we expect it to be used within 1 year. Mean it used to sell stock to generate more revenue. How about the prepaid insurance?
Okay, for prepaid insurance is insurance payments made in advance for a future period. For example, company pay 1,200 for 12 months. Kiranya prepaid insurance ni adalah insurans yang company perlu bayar pada tiap tahun. And for long term investment ni adalah pelaburan jangka panjang, iaitu investment company plan to hold for more than 1 year. For example, long term bonds. Dan long term investment ni adalah not current asset. For office equipment ni dia sama dengan office suppliers, iaitu bekalan pejabat. Cumanya office equipment ni adalah permanent asset. For example, computer, table and chair. Dan office equipment ni adalah not current asset.
Okay, the next accumulate depreciation officer equipment. We put in financial position in non-current asset because the value of office equipment with be deduct to get the book value. Okay.
And for the delivery fan, the the total depreciation charge against the delivery fund over its useful. This as a control assets under delivery funds, and the depreciation expense for the period is recorded as an expense.
Okay. Accumulate depreciation, delivery van. They also financial position in non-current asset because the value of delivery van with be deduct to get the book value.
So next, account payable. Account payable, we put in statement of financial position as a current asset liabilities because it is a short-term debt, mean we are debt from supplier, owned to the supplier, and not yet paid, and not yet paid to the supplier. We have debt from them.
Salary payable. We put in financial position in current liability because this amount has not yet paid and must be paid within 1 year. Yeah. And then interest payable, they also in financial position in current liability because it is same. This amount has not yet paid and must be paid within 1 year. And then
For unearned revenue, we put in statement of financial position as a current liabilities. We can settle soon. That's mean usually fulfill within 1 year. Uh, in the same thing is uh,
So now I'll explain the notes payable. So notes payable is a liability account that represents amount owed by the business under promissory notes. This usually carry interest and have a set repayment date. So it's under the liabilities. If the amount is payable within 1 year, then it's a current liability, and it's if the amount is the due is more than 1 year, then it will go in the non-current or long-term liabilities.
so the next capital Iskandar Abu. We put in financial position in on the equity because the amount that Abu bring in the company in order to be to the business to operate. And then the second is withdraw Iskandar Abu. They also we put in financial position in on equity. That's because the amount that's Abu take from the business from his personal gain. This will reduce the capital amount for Abu.
sales.
Sales. Who's your part?
Sales.
We're going to discuss about sales.
Who sells?
Sales.
Sales. For sales, we put in income statement as a revenue. So before we get the gross profit. Next, sales return as an allowance. It is contra revenue. that we put at a profit and loss revenue at a revenue side because we want to reduce the revenue, mean reflect goods return or price reduction. Sale discount.
Okay, so now I'll continue from sales discount. Yeah. So sales discount is that discount which is given to customers for early payment or like bulk purchase. So it's basically for attract the customers towards the product. So it's stated as a profit or loss statement in contra revenue account, and it's deducted from sales revenue.
For advertising expenses, we put in income statement at the operating expenses side because it is affect profit and to reduce net income. Next.
For the depreciation expense of this equip, it is recorded on the income statement as an operating expense, reducing the taxable income for the period. For example, if the annual depreciation expense for office equipment is 1,000, this amount will decrease the net income. For the depreciation expense delivery fan, similar to office equipment, this expense is recorded on the income statement, impacting the overall profitability of the business. If the annual depreciation expense for the delivery fan is 2,000, it will also reduce the net income.
Dealer.
Delivery fan for the delivery fan repairs and maintenance, it's not like the depreciation. These costs are typically expensed in the period they are incurred. They are recorded as an operating expense on the income statement, affecting the overall operating profit.
For the cost of merchandise sold, COMS, it's the direct cost of purchasing or producing any kind of goods that a business sells. So it's also known as cost of goods sold or COGS. So in our profit or loss statement, we deduct it from sales to calculate the gross profit. And
For the sales salaries expense, recorded as an operating expense on the income statement, these costs are necessary for generating sales and are tax deductible. For example, this amount will reduce the net income. For the sales supplies expense, these expenses are recorded in the period they are incurred, impacting the overall sales expense on the income statement. This will also reduce the net income. For the insurance expense are recognized on the income statement as they are incurred, reducing taxable income and reflecting the cost of risk management is business operation. It will decrease the net income.
for office salaries expense, office salary is the cost of wages paid to employees working in administrative or office roles. So it's a monthly payment. It's we put it office supply. Office supply is the cost of supply. So on. So it's
Have 1 minute more. And for rental expenses, we put in income statement at a operating expenses side because we need to pay for property in held business. How about utility and interest?
the definition of utility expenses like we that, that expenses which are related to utilities such as electricity, water, and internet used for business operations. So usually we put this account on profit or loss statement. It's also under the operating expenses.
So for interest expense, we put at income statement as operating expenses because we need to pay the interest that all of goods we have. So that's all from our discussion. We have come to the end. Okay, thank you.